Trustee Morales, will you please convene the Committee on Audit?
Thank you, Chair Eisen. Will the Committee on Audit please come to order? I note that there's nobody has requested to address this committee today. Now we move to the consent agenda. It is now time for the committee to consider today's consent agenda. Does any committee member wish to remove any item from the consent agenda for further discussion? No. Hearing no requests, there are no objections. The consent agenda is approved. The committee has 2 items in today's discussion agenda. Item 3 is an action item. Calendar year 2018 Plan for Audits, Advisory Services, and Investigations. The item will be presented by Larry Mandel, Vice Chancellor and Chief Audit Officer. Please begin, Larry.
Thank you, Chair Morales. Item 3 in your agenda includes the audit plan for audit and advisory services for calendar year 2018. At the November 2017 meeting of the Committee on Audit, Audit and Advisory Services provided an update on the status of the implementation of the new organization structure to be phased in over a 4-year period. The audit plan for calendar year 2018 constitutes year 2 of the new organization structure phase-in period. In order to provide for individual campus audit plans that are aligned with campus and auxiliary organization risks, risk assessments have been completed for each campus and the Chancellor's Office. Audits represent the largest portion of the plan. As part of the 2018 risk assessment, in-person interviews with campus management were completed in order to build upon information learned in the 2017 risk assessment to identify campus-specific topics to be reviewed. Customized campus audit plans are created for each campus and the Chancellor's Office, and once finalized, audit programs are developed and executed. The next largest area included in the plan is advisory services. Advisory services was introduced as a new function in 2013 and continues to be well received within the system. These services partner with management to identify solutions for business issues, offer opportunities to improve the efficiency and effectiveness of operating areas, and assist with special requests while ensuring the consideration of related internal control issues. The third major component of the plan is investigations. These reviews are often aligned with the result of alleged misappropriations or conflicts of interest and include whistleblower investigations that are received via referral from the state auditor and directly from the Chancellor's Office. The audit plan allocation percentages are based on estimated available staff hours. Audits are shown in blue on the plan allocation chart, approximately 72%. This area includes general audits as well as audits of information technology, sponsored programs, and construction. General audits encompass operational and/or financial reviews of specific campus and auxiliary areas, including the use of continuous auditing techniques. Continuous auditing uses data analytics tools and techniques to analyze large volumes of data, look for anomalies and trends, and complement the existing risk assessment process. Continuous auditing techniques will be used to review credit card data for 12 campuses to identify potential risks and to evaluate compliance with policies and procedures. Information technology audits, as determined by a separate information technology risk assessment, include reviews of information security, information technology disaster recovery, cloud computing, and decentralized computing, and may also include campus-specific concerns or follow-up on prior campus issues. Sponsored program audits include both pre-award and post-award activities. Pre-award reviews will emphasize compliance with conflict of interest and training requirements. Post-award reviews will emphasize review of operational, administrative, and financial controls to determine whether processes and expenditures are in accordance with both sponsor terms and conditions and applicable policies, procedures, and regulations. And Construction audits continue to focus on recently completed construction projects, including activities performed by the campus, general contractor, and selected subcontractors. Advisory services is shown in yellow on the chart. Advisory services are more consultative in nature than traditional audits and are performed in response to requests from campus management. Their goal is to essentially proactively prevent risk rather than conducting audits to detect problems after the fact. Investigations are shown in brown on the chart. Investigations are performed in response to campus requests that are endorsed by the Chancellor with the approval of the Chair of the Committee on Audit or via referral from the California State Auditor. The remainder of the plan includes staff time for committees and special projects and audit support, which are shown as maroon and green on the chart. Audit support includes the annual risk assessment process as well as day-to-day administration of the office, including such tasks as scheduling, personnel administration, and maintenance of department standards, protocols, and automated systems. If you have any questions on the audit plan, I'll take them at this time.
Any questions? Being none, thank you, Larry. The calendar year 2018 plan for audits, advisory services, and investigations is an action item before the Committee on Audit. Only committee members may vote, and this is the motion that the chair would like to have somebody move. Resolved by the Committee on Audit of the California State University Board of Trustees that the calendar year 2018 plan for audits, advisory services, and investigations as detailed in Agenda 3 of the Committee on Audit at the January 29, 31, 2018 meeting is approved. Do you have that motion?
Move it.
Second.
Any discussion? Also, please say aye.
Aye.
Opposed? On the motion. Item number 4 is an information item regarding the report of the system-wide financial statements and single audit of federal awards, including the report to management. The item will be presented by Steve Relia, Executive Vice Chancellor and Chief Financial Officer, and Mary Eck, Assistant Vice Chancellor, Controller, Financial Services. Please begin, Steve.
Thank you, Trustee Morales. Each year in January, we present an information item to the board on the CSU financial statements, on the Office of Management and Budget's single audit report, which is a report we do on federal funds that we receive, and the results of our external annual audit, which is performed by KPMG. This information item will be presented by Mary Eck, the Assistant Vice Chancellor and Controller, and we'll also hear from the KPMG external audit partner, Mark Thomas. So with that, I'm going to turn it over to Mary.
Thank you, Steve, and thank you, Trustee Morales. In your packets, you have the audited financial statements and the single audit report for the year ended June 30, 2017. Today, I'll highlight some important aspects of those statements. This slide provides a summary of the revenue for fiscal year 2016-17. Total revenue, operating, non-operating, capital, and non-capital was $8.2 billion for the year. As shown on the pie chart, the breakout of total revenue, similar to the prior fiscal year's distribution of revenue, shows the largest source was state appropriations at approximately 40%, while net tuition and fees represents approximately 27% of the total revenue. Grants, contracts, and gifts are approximately 23% of total revenue. Across all sources, revenue increased by $269 million in comparison with the previous year. This is primarily attributed to an increase in state appropriations for non-capital operating budget, as well as the system-wide graduation initiative, retirement cost adjustments, and student success programs. This slide provides a summary of expenses, which totaled $8.2 billion. As shown on the chart, the majority of those expenses are for instruction and educational support activities, representing approximately 67%, which is primarily related to employee expenses. Total operating expenses increased by $658 million from the previous fiscal year. This was largely made up of increases in employee salaries of $231 million, as well as employee benefits of $359 million, which is mainly related to the pension expense. Also, supplies and services increased by $84 million and depreciation and amortization by $23 million. Additionally, the net non-operating expenses decreased by $170 million, primarily a result of the restructuring of the agreements with the State Public Works Board and debt refunding. This slide provides a summary of the net position by category. The total net position as of June 30, 2017 is $38.5 million, which represents a decrease of $3 million from the previous year. As shown on the chart, the portion of net position invested in capital assets, net of accumulated depreciation, is $3.4 billion. The restricted net position of $259 million is primarily related to endowments, scholarships and fellowships, research, loans, capital projects, and debt service funds. The unrestricted net position is in a deficit position of $3.7 billion, mainly due to the recognition of the university's net pension liability. This unrestricted net position consists of two elements: $1.4 billion of designated resources from various fee collections and other activities that are used for specific purposes as described in the State of California Ed Code, in addition to the negative $5.1 billion, which is the net number of pension liability and other reserves. This underlying data is consistent with the presentations that you saw in the September and November board meetings in the reserves and pension deep dive topics. This reflects the generally accepted accounting principles, or GAAP, representation of those numbers. This data does not yet include the retiree health care liability, nor the adjusted rate of return from CalPERS, which will be reflected in the June 30, 2018 data. There were no audit findings in the system-wide financial statements, and of the 90 auxiliary organizations, there were 6 auxiliaries that had audit findings this fiscal year. The 3 material weaknesses noted on the chart indicate a finding that there is a reasonable possibility that these could cause a misstatement in the financial statements. Additionally, there were 3 significant deficiencies which indicate a finding of the lack of effective internal control processes. The Chancellor's Office is following up with each auxiliary organization's board of directors to ensure appropriate corrective actions are taken. As required by the Office of Management and Budget, we conduct a separate audit on the federal funds we receive. The single audit of federal awards is performed annually. The findings overall were of minor financial materiality. However, they are required to be reported in a single audit. System-wide, there were 3 audit findings related to the administration of financial aid programs. 3 campuses that did not comply with federal requirements to notify students or parents regarding federal direct and Perkins loan disbursements. 5 campuses did not have effective controls in place to ensure the timely and accurate reporting of student enrollment status changes to the national database. And 1 campus that did not comply with the federal requirement over verification of student aid application information. In addition to the system-wide findings, there were 2 auxiliaries that had errors in their schedule of expenditures of federal awards. Corrective actions for all of these items are in progress, and a status update will be provided at a future Board of Trustees meeting. Trustee Morales, that concludes my presentation. I'd like to now turn it over to Mark Thomas, our KPMG audit partner, for a few comments.
Good morning, Chair Morales and trustees. I'm glad to be here this morning. We've completed our audit of the California State University system. Just for perspective, this is a monumental task, as you might imagine. It involves more than 20 CPA firms across the state of California, 23, as you know, full-size campuses, plus a chancellor's office, plus 90 separate not-for-profit organizations, each of them audited on a standalone basis. In addition to that, you have federal funds audits going on at about 25 of the auxiliary organizations, and of course the $2.6 billion that are received primarily in student financial aid here at the California State University system proper. I'm happy to report to you that the results of the audit is you have an unmodified opinion on your report, on your financial statements. That's the clean opinion, if you will, on your financial statements with no significant findings. There's a whole list of required communications. We've reported those in writing to the audit committee. You have those in your packet, so I won't spend any time going one by one, but I will just generally say there are no significant items to report as far as internal control findings, audit differences, those types of things. As we move on to the single audit, as Mary just discussed, the California State University system receives $2.6 billion in federal funds, primarily for student financial aid. 98.5% of $2.6 billion is student financial aid. A single audit is a very, very prescriptive audit. The rules are set out by the federal government, as you might imagine. They're very detailed. I'd put the rules for student financial aid and single audit up against the tax code any day of the week. They're quite complex. So we go through a process of checking off procedures that the federal government requires us to do. The federal government sets a level of materiality at $25,000. And so it's a very low number. And so you do have one finding on an over award. As Mary mentioned, it was an $800 finding, but then we have to extrapolate it to the whole population. As you might imagine, any dollar error that you find and you extrapolate to your entire population of your university will be over $25,000. So it's identified as a material weakness, but I would just put it in for context purposes, I'd put it as a minor finding, and then the other two I'd put in the administrative category to where they're not substantial. I would highly doubt there would be any kind of a future action based on those remaining two findings. And again, with the single audit, you also have received clean opinions on that as well. With that, I'll pause there and be more than happy to answer, I know Mary as well, any questions that you might have about the financial statements, the single audit, or the audit thereof.
Any questions? Oh, yes, please.
I have one, and it comes out of the management
Peter.
discussion and analysis. I'm sorry, did you not call
please,
on
no,
me?
No, but please go ahead.
I'm very sorry. On page 24, during this academic year, there was an increase in gross student tuition and fees, but it was offset by an increase in scholarship allowances. The net student and tuition fees decreased by $19.5 million. So how does this happen? That we have, this was not the year of the tuition increase. This is just more students enrolling. They pay their tuition and fees, and we end up with a net decrease.
Yeah, that is correct. There is scholarship allowances that offset the tuition payments, and they offset the difference between year over year is $19.5 billion decrease, or $1 million decrease. Yes.
I'm sorry, I couldn't hear that last part that you said.
It's the difference between last year and this year. So there's a decrease between the 2 years of the net tuition and fees of $19.5 million.
But the enrollment went up, right? So more students are paying the tuition and fees.
Right.
So I'm wondering if
Scholarship
something is happening with the state university grants or something like that. That are they growing faster than the? I mean, I thought it was a set aside of a percentage.
Yes, generally it's a set aside of a percentage.
So it can't grow faster than the enrollment growth, correct?
Should not. It should not.
So I still don't understand how we end up with a decrease when enrollment goes up.
We'd have to go through the detailed numbers, but year over year the decrease was $19.5 million. But we can go through. We can get you the details. So I'm not thinking off the top of my head right here.
Well, the only reason that this is important to me is that we have a potential further discussion of a tuition increase, and we need to know how this works.
Yep.
So I think I would like a report back on that, please.
Sure.
Thank you.
Mr. Taylor?
Thank you very much, Chair Morales. One of my three questions was the exact item that Trustee Carney just raised. How is it we hold tuition flat and we end up with less money when we have more students? So a report back on the math there would be very useful. I suspect that Ed does have something with the incredibly generous $1.55 billion that we're putting into SUG, and I would like maybe an explanation simultaneously about implications, and maybe this is more appropriate for our CFO, Steve Relier, the implications of capping SUG, because, we can debate the pros and cons of tuition increases versus not, but boy, losing money and ending up with less resources is a bad outcome. So I look forward to that discussion in March, and thank you, Trustee Carney, for raising that. On the MD&A, the management discussion analysis, there were a few things that jumped out at me. And, Mr. Thomas, always a pleasure to have you before us. Members, I've worked with Mr. Thomas many times over the years. So many times I'm convinced that in order to be a partner of KPMG's LA office, you have to be named Mark, because I think they all are. On page 7 of the MD&A, rather substantial jump in non-current liabilities, over $2 billion in 1 year. I'm assuming that has to do with pension and OPEB. But maybe, and correct me if I'm wrong, is page 13 the best place to focus on the reasons for that big jump in non-current liabilities of $2 billion plus?
I'll just point you a little bit more of a detailed, on page 32 gives you just a little bit more detail of the components of current and non-current liabilities on the statement of net position.
Yeah, I went through that, and I guess what I didn't see was the jump, because this just shows 17.
Comparison, correct.
It didn't show 16 kind of side by side. So I was trying to figure out why the big jump, and I assumed by virtue of the discussion on page 13, much of this had to do with what, again, it says $704 million increase in the net pension liability as pension expense in 2017. That $704 million is just for CSU. That's not like a all state employees kind of thing. It's just us.
Yeah, in the
In
general
1 year,
state.
$704 million.
Yeah, and remind me, but it's clearly a substantial number of the state's general CalPERS plan. CSU makes up
23%.
23% of the plan. So to give you a sense, you are clearly the largest employer of the state in the CalPERS plan.
We're also the best employer district.
Good to know.
Further concern, members, on page 75 of the notes to the financial statement, it talks about CalPERS' stated ambition to lower the actuarial rate from 7.65 to 7.15, and the implications for that are even more dire for us, since we are 23% of their universe, and likelihood that even more money will be called out of the state budget that might otherwise go to our operating to pay for a liability expense on the pension side, correct?
Right. We expect that number to grow in the next year because of that change, and so that will just drive harder decisions.
Yeah, we discussed a lot of those hard decisions yesterday, but I'm really kind of hoping maybe you might find a silver lining in this cloud.
I'll tell you this, Trustee Taylor, that you have, there's one more shoe to drop here. You have other post-employment benefits that right now the university is not required to record in its financial statements. However, as of June 30th, 18, they will be required. And so in almost a virtually identical way that the pension is recorded now in the financial statements. So unfortunately, I don't have good news for you in that one. There will be an additional liability coming on your financial statements as well.
Well, at least it's more transparent and accurate in terms of what our future liabilities look like, and only exacerbates, frankly, some of the pain and suffering we went through yesterday. So more clouds to come, unfortunately. All right. Thank you. Very well done. And I do compliment you on a financial statement that by and large was written in English. So well done there.
I will say one more thing. Is we are seeing positive returns, obviously, in the market, which will help in some of the investment. Obviously, some of the estimates are base-estimated, if I can use Larry's word.
I love that term.
Yeah, are based on market returns as well.
Yeah. Okay, fingers crossed.
Trustee Campbell?
Yes, thank you. Yes, like Trustee Carney, I'm also confused, a little bit confused in that number. And also, just going back to the chart on the item 4 on state appropriation, non-capital and capital, it's at 40%. I was thinking, I always thought it was 50%. Is that, it's the state contribution to us is 40%?
It's 40% of the total $8 billion. So it depends on how you cut the data. If you look at data excluding, sometimes we exclude grants, contracts, and gifts. So depending on how you look at the data, but in the total aggregate $8.2 billion, it's 40%.
Okay, thank you.
Just to be clear there, Steve and Mary and Trustee Kimball. So our operating fund, you're correct, the state appropriation is a little over half of that support, and the other half comes from tuition and fees. But when you add in the auxiliaries, so the residence halls, food services, grants and contracts, our total parking, our total expenses go from $6+ billion to $8+ billion. And that's why that percentage then goes down. It's just mathematics.
So when we're looking at the 6 point whatever billion budget, that they're contributing half. The state's contributing half. Okay.
Slightly over half.
All right,
currently.
thank you.
Trustee Taylor?
One more question, I forgot. A little bit concerned about the material deficiencies on the part of a few of our auxiliaries. When do we get a follow-up on the status of that?
So we are collecting the corrective actions, and we'll go through those to make sure they're adequate, and then we'll follow up with the status to the board. It should be the next board meeting.
Great. Okay, great. Thank you.
Any more discussion, questions? Okay. Chair Eisen, this concludes the business of the Committee on Audit.
Just one more comment before we conclude the committee. I'd like to commend our staff here in the Chancellor's office and Mark, your group, and the campus groups that do this. You use the word monumental. Usually auditors don't understate. And I think Larry Mandel and Trustee Fagan's comment that audit is more exciting than you think is particularly true when you get such a clean finding as this. And identifying the limited number but important soft spots helps me believe in our transparency and accountability, and we follow up when we do find those soft spots. So to everybody involved in this minor project, thank you. I commend your work.
On behalf of the rest of the trustees, I want to second that. I think it's an incredible amount of work, and also the auditor. I want to thank you for all your work. It's monumental. So thank you very much. This concludes the business of the committee, Ms. Chair.